We're here in Chicago at the first ever Investment News Alternative Investments Conference. Hundreds of financial advisors and industry professionals have gathered to talk about non-traditional investments and different approaches to managing risk, preserving capital, and also increasing returns in retail investors' portfolios.
It's great to be here at the conference. There's some outstanding speakers. I'm certainly learning a lot.
Well, I think the conference is an outstanding idea and concept to educate advisors about the real potential of alternatives.
The ETF session I just sat in made the whole trip worthwhile.
With the experts that we've assembled for the panels and for our keynotes, the advisors here will be able to take away real insights and new strategies to be able to better educate their clients on the alternative investment universe and what's currently available for them.
You have to remember that alternative investments are not super risky the way people think. People think alternative investments, it's like Bernie Madoff or Paulson or something. It's going to be huge or it's going to blow up. Most of them are not like that. They're kind of boring. They occupy a space in risk roughly between the bond market and the stock market. And if you have a quarter of your portfolio, assuming you understand what you're doing and you know what these things are, then that's a prudent place to be. If you don't understand them, the correct allocation would be 0%.
Well, kind of the idea and the main points on ETFs is liquidity. The fact that you can invest on exchanges, buy in the morning, sell in the afternoon if you want. Low cost, diversification within certain asset classes, are really key, and the tax efficiency. But as it pertains specifically to alternatives, you've got asset classes that traditionally advisors, investors didn't have access to before.
I really think that's the name of the game going forward. It's really delivering on that notion of lower volatility and diversification for a client. That's where alternative mutual funds fit in. It's not just comparing one managed futures fund to another, but what does a managed futures fund do within the context of a portfolio an advisor is already constructed for their client?
We have so many people we talk to that are concerned about the market, that it's going to keep going down, but are also concerned to get out, that they're going to miss the upswing. And so equity long-short investing with equities is just an important part of a portfolio that just gives you some downside protection. It limits the volatility on of your long-only equity portfolio. It's a great complement to your equity portfolio, and it also gives your portfolio managers a ton of other options when they're building portfolios.
There is tremendous skill that is being brought over into the alternative mutual fund area. To me, especially in fixed income, it's at a level equivalent with, or to be very honest, superior to what exists in buying individual hedge funds.
I think it's not so much an asset class as an approach to investing. And I think as we go forward, we'll continue our coverage of the many aspects of alternatives, from regulation to the investing models and the varieties of available investments that are available to advisors.